Hi guys, welcome back to my channel. Kelvin here. Over the past few months, we have been seeing more and more HDBs being sold at record high prices. Like this ground floor Yishun flat being sold at $1 million. Same for this Bukit Batok flat which is being sold at $1 million. And also this 5-room HDB being sold for a record $1.4 million. Meanwhile, HDB prices have been rising for 25 straight months since 2020. So the question is housing still affordable to the average Singaporean, or will we eventually get to a point and end up becoming like Hong Kong, where it's almost impossible to own a house unless we are born rich? Before I start, I would greatly appreciate it if you can help to tap the like button and subscribe to the channel. In return, I will show you a cat giving a high five. Alright, let's start right now. So, how do we measure whether housing is affordable or not? Because while those million-dollar HDBs may be unaffordable to the average Singaporeans, it's basically just chicken rice money to people like DBS CEO Gupta-san. One simple way is by looking at the growth of housing prices versus the growth of your pay. The idea is simple. If your pay is going up faster than the housing prices, that means houses are still affordable. Check out this chart by Stat Homes. The blue line here is the median income, while the orange line is the HDB resale price index. The chart shows that over the long term, median income actually went up more compared to HDB resale prices. So it means that housing is still affordable, right? Well, not quite. Someone on Reddit pointed out that this data can be easily manipulated to completely paint a different picture. Let me show you how. I went to get the median monthly household income from SingStat, then the HDB resale price index from data.gov.sg, then pop them into a chart. If we were to use 2006 as the starting point, we would find that HDB resale price index have indeed gone up more compared to the median household income. So housing suddenly become unaffordable then? As you can see, if we were to compare the growth rate of household income versus housing prices, it would be hard to tell an accurate picture. So is there any other way to measure affordability? As it turns out, there is. And that's by looking at something called price to income ratio, where you take the housing price then divide it by the homeowner's annual income. According to a study done by Urban Land Institute, which looked at housing affordability in the Asia Pacific region, they found that Singapore's HDB has the lowest price to income ratio of 4.5. Then, if you compare it to other big cities like Shanghai, Hong Kong, Tokyo, Seoul, where the price to income ratio are all above 10, Singapore HDB's 4.5 price to income ratio is considered quite impressive. Similarly, the average price to income ratio for 4 to 5 room BTOs in the last 20 years is also around 4.1, which means it's also quite affordable. Take note, all this doesn't take into account all the HDB grants that are available, which will have made housing even more affordable. But even with all that price to income ratio comparisons, I have to admit, this is overgeneralizing a lot of things. First, it's just using an average price to income ratio. If we look at this map, we can see that HDBs in central areas like Tanjong Pagar and Chinatown are near the $1 million range, while HDBs at Woodlands and Marsiling are around 400k range. Second, it's just using the median salary. Based on data, we know that the salary tends to be the lowest when we first graduate, then peak when we are around 40 to 44 years old. So what may be affordable to someone who are in their 30s or 40s may be unaffordable to young couples who are in their 20s. Third is assuming that people living in the house are a traditional family unit, where it's the usual dual income family with 0 to 3 kids. Obviously, if only one person is working, or if they have as many kids as a soccer team, then it becomes super unaffordable. Quick pause, let me share a quick message from this video's sponsor, Weibo. This month, Weibo has further improved their sign-up bonus to $130 worth of free Tesla shares and a free Grab voucher worth $10. All you'll need to do is deposit at least 2,000 HDD into Weibo, make one buy trade on either US stocks or US ETFs, make another buy trade on US option, while maintaining a 2,000 HDD net account value for that 30 days, and you will receive all your rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. Besides using price to income ratio to determine affordability, we can also use something called the 335 rule, which is promoted by CPF themselves. First, you should have enough capital to pay for at least 30% of the property's asking price. Second, your money mortgage shouldn't exceed 30% of your monthly salary. And third, the purchase price should not exceed 5 times of your annual income. So let's assume Xiaoming and Mary earn the 2021 median household income of $9,520. We will first look at whether they can afford to get BTOs or not. This is the list for the August 2022 BTO exercise. Let's go for the Jurong BTO because maybe the food in the West is better. The starting price of a 4-room flat costs 283k. So let's check the affordability using the 335 rule. Their mortgage limit is at $3,173. So they can definitely afford the 25 years HDB loan of just $1,091 per month. They will also meet the 5x annual income criteria. In short, this BTO is definitely affordable to most middle-class Singaporeans. But I know that it's super hard to get BTO nowadays. If you look at this chart, you will see that while the number of BTO flats launched annually have been about the same, the number of applicants have kept going up, especially with popular projects like Telok Blangah, where on average there were 28 applicants trying to bid for each unit. And with BTO waiting times now at 4 to 5 years, people be like, ain't nobody got time for that. By the time people got their flats, they will be in their 30s instead. Because of that, more and more couples have turned to look towards resale HDBs instead. Again, remember that prices can vary a lot depending on where you are buying your resale HDBs. How near is it to the MRT? What level is the unit at? And so on. So for this, I will just use the 4-room median resale price for July 2022, which is $520,000. If we use the 335 rule to check again, we can see that Xiaoming and Mary are still able to afford to pay for this HDB. But what about condo? Check out this chart from Stat Homes. In February, the average price for condo was around $1.4 million. For condo, you can only use bank loans, which means that the down payment is 25% of property prices. Basically, you would have to fork out about $358,000 initial capital. Assuming the mortgage interest is 2%, the monthly repayment will come out to be $4,554, which is definitely super unaffordable for Xiaoming and Mary. So, in summary, if you are earning a median income, you will only be able to afford either a BTO or resale HDB, unless your salary goes up a lot or you suddenly whop big by winning the $11.5 million Toto. So, is Singapore housing affordable? I would say ultimately, it depends on what you want. Home prices have been going up steady from PP over the years and it's not going to stop anytime soon. For BTOs, more and more people are treating BTOs as a lottery ticket. That's because BTO prices are pretty much guaranteed to go up after its minimum occupation period. Like for 3-room flats in top 5 HDB towns, you can usually sell it for twice the original price. As a result, demand for BTO projects is super high. Then, for people who can't afford to wait for BTOs, they have no choice but to go for resale HDBs. Added along with the growing Singapore population, demand for resale HDBs will definitely go up. Let's not even talk about condos. They are a whole game on their own, as money is not a problem to rich people. In the National Day rally, PM Lee had already said that the government will be able to build enough flats and plans to continue making sure that homes remain affordable for Singaporeans, like introducing more cooling measures, launching more BTOs, and introducing a 10-year minimum occupation period at prime locations. Despite that, home prices will keep going up no matter what, even though they have the 99 years lease period. But as a guy on Hardware Zone puts it very directly, beggars can't be choosers. Or a nicer way of saying that is, you need to manage your expectations. As the woke salaryman mentioned, there's nothing wrong with having an average life. But instead of aiming for a $1 million condo, you need to learn how to be happy with living with a 530k HDB. Even for a multi-millionaire like the 1M65, Mr. Lu guy, he has no problem living in a 5-room HDB because he doesn't see the need to upgrade to a condo. Sure, we can go plop down all our money on houses so that we can live more comfortably. But as a result, we might end up having less money to do other stuff. For me, I think there's a lot more to life than just materialistic stuff. Instead of aiming for expensive houses, it's probably more meaningful to go for more overseas vacations, or bringing our parents out for a nice meal, or just do the things that we have always wanted to do. Because sometimes it's easy to forget that life is short and there's a limit to how much money that we can earn in our lifetime. Anyway, that's all for this video. But what do you think? Are homes really getting unaffordable in Singapore? Do comment down below and let me know. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.